All right, everyone. Welcome. Thanks for coming by to what is certainly not a quiet day in the market. So, we have a whole lot of tariff news. We're going to go over some of your guys' tickers. But first of all, I'm just going to get started here and fill everyone in case you just turned on your computer a little later in the day. You have no idea what happened. Pretty wild day, just already off the open. So, of course, there was the news on Friday. If you missed that, essentially, there was a kind of report that came out or a leak or something, essentially saying that a lot of these tariffs were just negotiation tools and they were going to be delayed or not really go into effect. And then Trump came out and tweeted and said that's not at all true. There's nothing that these places can do to get out of these tariffs and all of the strongman negotiation tactics that certainly we've come to expect. So that caused this sell off into Friday and then a gap down this morning where there was no kind of news reports. There was nothing to update us in what was happening. We open up and then we kind of start to rip from there. So let's go. I can do this chart and this will just show essentially from the open on Friday or on Sunday night. That's what the market looked like. So sold off all day, pretty much Friday, gap down, opened up on Monday, and spend pretty much the overnight session just chopping around. So we undercut the open right here. So we undercut this right off the open. So we're hitting new pre-market lows. We're hitting kind of new all lows. And then, of course, reports come out. So the latest news, as I read it, is that at least Mexico is being let off the hook for the tariffs. And that is causing this rally where essentially it confirms that, yes, this is a negotiation tool. If the right negotiations are met, then the tariffs will be lifted. So kind of saying that this probably isn't a long-term phenomenon, but a little bit more of a shorter-term type phenomenon. So market reacting really, really strongly off that negotiation, and you can just see it in EWW. For those who don't know, EWW is the iShares Mexico ETF. This has been selling off for some time, ever since May of last year, and gap down pretty heavily this morning with again the fact that there was no news on the tariffs, and now we are green. So at least today outperforming the S&P 500 Mexico. So good for you guys. Nice bullish candle, but you can see obviously a pretty broken chart. So some things that I just wanted to point out quickly. Again, put your tickers in. We'll certainly go through them, but just a little bit of a wrap up of what we are seeing is this is the overall quote board. So this is what I look at a couple times a day, probably too frequently, just to see what's happening in the market, what's up, what's down. And a lot of this makes sense. UNG, GDX, wheat, all of these commodity type ETFs, it makes perfect sense that these are up because people are essentially the whole point of tariffs is to punish imports from other countries and to try to force people through inflating prices to then have to go and buy local within the US. So it makes sense that the US oil fund would be up or US natural gas would be up because exporting those gases and exporting that oil isn't something that is going to be as lucrative as it was before. So even though you're going to be paying more getting the domestic versions, then it might make sense to do that because again, we are inflating the price of the imports that are coming in. So all of that makes sense. Some areas that didn't. First of all, this wild Bitcoin moved right up here now. The wild reversal in Bitcoin and in crypto as a whole. So we'll take a look at that. That one's a bit crazy to be honest. How correlated this is to the Qs and then also PSIL, which is the psychedelic sectors. So I don't know if people are just taking some mushrooms to make the blues go away, but we have psychedelics doing well. And then we also have Bitcoin doing well. So if we take a look to the Bitcoin chart, this is if we close like this, still a lot of action left in the day. But if we close with this kind of candle in Bitcoin, this is we don't need this one anymore. A reversal to end all reversals, right? We were selling off all weekend, all Sunday, pretty much all of yesterday, all the way down to $90,000. And you don't need to be a CMT or any kind of crazy technician to see what's been going on in Bitcoin. Ever since we hit 100,000, we've just been chopping around. It makes sense. It happens all the time at big psychological numbers. You have people taking bets on both sides. You need to, people who are trying to short it, people who are trying to buy it, people are taking bets on both sides. So you get this consolidation in ranges. But look how textbook this has popped off, say 90, 91,000 over and over and over again. As we sold off dramatically there, hit that almost to the tick and just a crazy reversal. We're talking 7,000 points from the low today to the high. And you can see that happening right here. I don't know why a cryptocurrency should care about tariffs. I think kind of the whole point of this stuff is it's not supposed to be nailed down by a country, but that's chat for another day. The reason that this is interesting to me is because of how correlated Bitcoin is with the NASDAQ. It is verbatim linked with large cap tech and with tech in general. So as we continue to see that occurring, it just makes it interesting that we have this bounce. So for me, again, I look at crypto. If you're someone out there who's not interested in cryptocurrencies at all, I still say look at Bitcoin because it's a risk asset. You are not going to have the entire world falling apart when magic internet money is doing very, very well. And we see not only is it doing well, it is outperforming relatively, at least today, on that news and on that tariff lifting. So again, I think it's one of those that more than anything, just a little tariff talk because you have to, right? That's what's going on in the news. I don't think the tariff is the thing that people care about. I think it's all comes down to the Fed. I think it always comes down to the Fed. So if tariffs are inflationary, they they just are. If I need to buy steel produced in the U.S. As opposed to steel produced in Canada, which is cheaper, then the companies, the GM and Ford, who are buying the steel to make cars, they're not going to pay for that themselves. They're going to pass that down to consumers. So across the board, the general public, the retail public, pays for tariffs. Now, that means if there's some inflation going on, I think what everyone's really looking out for is the Fed, because if inflation starts to tick higher because of this event that they didn't predict coming with tariffs, then the Fed is going to cut rates at a little bit of a slower rate or not at all than normal. That is what the market's interesting. So if these tariffs get lifted up and down, I think this is more of an interest rate play than it necessarily is a play on the actual tariffed goods. Because I've heard a lot of people talking about, right, why is Bitcoin selling? It doesn't care about tariffs, right? I just made the joke earlier. But again, I think it's an interest rate play. I think it's one of those things that people are looking at interest rates as opposed to the actual tariffed good, the fact that steel or wood or whatever it is going to cost more. It's more about, again, that flow down of the average public who is paying for all of this stuff. They are going to be paying more. That is what the definition of inflation is. So that will increase inflation. Then the Fed cuts less. So I think this is all about the Fed. It's always seemingly about the Fed. So keep an eye on that. If these get lifted, more of them, right? There's Mexico. So next it's just my home and native land, Canada, that they've got to work out a deal. If that gets lifted and China also gets lifted, then these things are going to kind of just go by the wayside, right? Where it was a blip in time, the Fed can get back to doing what the Fed's doing based off whatever, and we will focus a little bit harder on, things like job reports and all of this. Last thing I want to talk about is FXI. Very much interested in this particular chart right here on FXI. This is the average price if you started buying China at the worst possible time after they had that big stimulus and that big push. You can see how this has been acting as resistance for a long period of time. We're getting back to that price now. So I am very interested in China. It seems like it's one of those things where now that we know that these tariffs are able to be negotiated, then what it is that every country is going to have to go one by one and sit down and say, okay, well, what do you want? How do we negotiate our way out of this? They negotiate their way out of it, and then potentially that country may pop. So, pay attention to Canada, natural resources, things like that would be the next thing to move. Shopify, that's really the only technology type company that we have up here. Used to be BlackBerry, now it's Shopify. They only give us one. We're only allowed one at a time. So those are things to keep an eye on. So there's my rant on what's going on, and now we can go into individual names. Most of these names are going to have some sort of the same daily pattern where there's some gap and potential rip. This is not, I'm going to kind of ignore those and look for longer term type pictures because we know what happened, right? We know what happened with the tariffs we went over at. The whole market is moving because when the market sell off, these correlations go to one. So first question is about Oxy. This to me is just a broken chart. Old Papa Buffett, he still hasn't, but he doesn't have to be right on every trade. He's just like the rest of us, right? We're not right on every trade. He doesn't have to be right on every trade either. Um, the so I'm just looking at this area right here. I think Oxy had what for the longest time, this is a weekly chart, was called the Buffett bottom, right? So lows right here, and then right here it was around $55 or so. It was support because he made it support. So every time it would come down to this price, he would buy some, and that would cause this pop to occur. Now, quite often, what happens is prior support turns into resistance. So you have a level that's a very important level. What happens is you have buyers that come in at that level. So people are trying to front run Uncle Warren, and they keep buying the same place he buys. They buy over and over again, and then they did pretty well. If every time it came down to this level, you bought, you had a nice little. As soon as assuming you scalped out, you had a nice little trade. So as soon as that breaks, well, now you have those people who are looking to get out of their position at hopefully around a break even price. That creates overhead supply. Then you also have people who have seen this breakdown occur and they wish they shorted the breakdown. You have those people getting back in. So uh, until it's we get back above that 55 or so, I look at this as a potential dead stock. Now, if it continues to sell, where would potential support be? A long way away. So I look at this kind of thing and I say, that's just not something I'm too interested in. Hanging out near lows, even when the price of oil and the price of natural gas and everything is doing okay today. So, and not participating in the bounce at all. So, broken chart in a downtrend, just not something I want to personally play with. I want to try to buy stocks in uptrends and sell stocks in downtrends. And next question is Nvidia. Of course it is, right? Nvidia is super important. I think everybody, whether you're a technician or not, I think I've heard this on CNBC. I think I've heard it pretty much everywhere. Is watching this 200-day moving average. Now, what's important if you're looking at moving averages, if you're looking at support and resistance, you guys saw, and I'll do it again here. You guys saw how I drew my support and resistance area. It's like a big box like this. Drawing a flat line and saying that's the area, that's generally not how it works. The way I was taught by one of my mentors when I was learning for my and studying for my CMT and everything, which is a great little saying that I like to repeat, is to draw your areas with a crayon, not a pencil. Essentially, just meaning it's a zone, right? We're saying, if someone says, "Hey, they like the stock at $10," doesn't mean they like it at 10 and they hate it at 9.99. It means that's the zone that it's kind of interested in. So I look at these moving averages, and this is the 200-day moving average, the same way. Now, the reason people look at the 200-day moving average is they like to because it is something that institutions are known to use. It's something that quants. I myself am a systematic trader. I do my analysis to kind of gauge where I think the market is and decide which systems I want to lean heavier into. And I will say in most of my systems, the 200-day moving average is used. And not because there's any magic to it, because you need some way to say, is this thing an uptrend or is it a downtrend? There's many ways you could do that. One of the most common is say, hey, if you're above the 200-day moving average, I'm going to classify the stock as an uptrend. Essentially means you're above the average of the last year-ish worth of price. If you're below the 200-day moving average, I'm going to classify you in a downtrend. And that happens a lot in these buckets. Now, again, it's one of those in which I wouldn't take a look at the exact price and say, okay, well, now we're below the 200-day moving average. So now Nvidia is awful. And 2 days ago when we were above it, it was great. I would take a look at this zone that we're in right here. If we can maintain that, that's great. If not, might be the end of the trade, at least for a little bit. What I will say is we're kind of stuck in a range. And I don't know, again, right, Nvidia is like a $3 trillion company. Can't double again, right? Can it? Probably can. It shouldn't because then it's bigger than, right, most countries out there combined. However, I look at Nvidia and I just say, hey, we're really range bound here. And every time Nvidia was an awesome trade, it was an awesome trade and you didn't have to buy it at the lows, right? You could have bought this breakout and that's from $40 to 100. So there's a double. You could have bought this breakout, so that's 96 to let's say 150, so it's 50% gain. We can go back in time, you can see it. It's been a very momentum stock. You wait for the break and then it goes, and you wait for the break and then it goes. So if I was to trade this name, which I'm not super interested right now just because it's stuck in the middle of this broader range, I would just say the same thing. Hey, if it gets up to these tops and looks like it's going to go, that's where I would get involved. And trying to pick a bottom down here, I just think you're in for a range bound bit of a mess. You can go to SMH, that's the semiconductor ETF, and you really get the picture of this thing is just in a range. It's just chopping, chopping, chopping. So there is, right, people always say, hey, markets can go up and down. Well, they can go up and they can go down and they can go sideways. And when it comes to semis, I think it's just sideways for a while until kind of the next event comes in. Generally speaking, right, a lot of these companies that are building AI, they know what they're spending over the next few years. They're not in that mode where they have to chase, chase, chase anymore. Not saying, again, I'm not a fundamental guy, so I'm not saying the story's over. I'm just saying, hey, we're in a range. Until that range resolves one way or another, wouldn't be interested in getting in. And if I was in, I would be putting my stops at the low end of the range and say, hey, if the range gives way, it's time to go. And then I can get involved back in, right? Dead money is almost as bad, in my opinion, as losing money because that's just money that you could do, you could use somewhere else. XRP, so someone's looking at Ripple. Ripple is very interesting if you go to the monthly chart. We have to find an exchange that's been around for a long time. Kraken? No. Let's see. The problem with charting these things, right, is they can be around for a long time. Anyway, if you find the right exchange, Ripple's back to its all-time highs and kind of struggling in that zone. Now, it looks like a lot of crypto will today, where we had a big push down and then a bounce from these lows. You can see it's wild how it happens right at these prior lows. Undercuts it a little bit, maybe to stop out some people, but right at these lows, we get a nice bounce and a push higher here. So same kind of thing. This is a momentum name where you have a push up. Something to study when you see charts like this. Look up Nicholas Darvis from ages and ages and ages ago. He traded in like the 1700s or something wild like that. But the idea is that you have periods where the market is out of balance. And people are trying to chase this thing higher as it moves higher. And then you have periods of time where the market goes, okay, this is pretty fairly priced. This is in balance. This is where I think the value of something like Ripple is. So let's just hang out here. That seems to be what's happening, at least right now in Ripple, is we have this kind of price balance. So this would be one of those periods of time, just like I mentioned in Bitcoin. You draw a line at the top, you draw a line at the bottom. If it breaks that top, then maybe you're excited and you get involved. If it breaks and closes below the bottom, then it's probably time to go. In this middle range, this is actually, I would say, where most active traders lose money. It's not so much most traders, I would hope. Most traders know that, hey, if I'm in something that's in a downtrend, I should just get out. If it's breaking support levels, if it's just moving down every day, week, month, it's probably time to go. Most people have kind of got that through their heads. I should be owning things that are going up. I should be out of things that are going down. Now, where most traders, I think, get into problems is dealing with this kind of action where it looks like it's going to break out and it doesn't. It looks like it's going to break down. It doesn't. This is where the patience is required. And I think when you're in the middle of ranges like this, the ability to say, I don't have to do anything, right? We live in a world where if I can set an order and say, hey, if it gets to this price, buy it. Or if I'm not comfortable putting those orders out in the market, I can set an alert and say, if it gets to this price, ping my phone, right? My smart fridge, yell at me through the internet that the thing that I want is at the price that I want it in, and then just kind of ignore it. So this, just like Bitcoin for me, is in the sit out. Right? For Bitcoin, I've got alerts and orders set at the high end of the range, and I've got alerts and orders set at this low end of the range. And until then, while we're just kind of messing around the middle, not interested, right? It's something that I know myself, and I know I will lose money trying to speculate. Now, if you're patient enough to wait for these lows, and then you can look to see if there's support there, and you can buy the dip, sell the rip, absolutely. For me, I'll allocate my money somewhere else. SMCI is another question. SMCI is just a worse version of Nvidia. If you think the whole AI play is going to reinflate and Nvidia is going to break out to new highs and all of that, SMCI is going to be a bit of a laggard on that one because I think they have like the DOJ knocking at their door. Down, it's below a declining 200-day moving average, which is generally not quite what you want to see, and looking not fantastic, right? So this is just a worse kind of looking stock. So there's a lot of academic research out there, a lot of things that you can read, basically showing that there is an extreme edge, a quantifiable and statistical edge to buying the best of breed, to buying the thing that is performing the best in a sector, and then actually shorting the thing that is performing the worst or near the worst. So Intel and SMCI would be that worse of thing for the long time. So now I have an area highlighted. You can see I must have analyzed this a long time ago. This $47, 48, but that's like a double from here. That's an area of support and resistance, an area of interest. This is going to be something that, again, you're going to have to play more off of a bet that whatever legal problems they got into is over and the AI uh, hype reignites. Both of those things have to happen in order for something like this to move higher, right? Just how it works, right? It doesn't matter if they get the all clear from the powers that be, and then AI is kind of already priced in, and no one really cares anymore. So there's a lot of stuff overhead. Not too interested in CLS. Yeah, so like this is, the whole buying things going up and then selling things going down. This is something that looks way better to me, and something that I have owned in the past. I think on this breakout right here of 64, I'd love to say I was still in at 123, but this is if you're in this one, this is one of those where you set a trailing stop, or you pick a moving average or something like that, and say if we get below that moving average and we close for a day or a number of days, I'm out, and you sit back and you let that thing work for you. We are breaking out to new all-time highs. That can't be a bearish thing to hit new all-time highs. It means that everyone who's short is wrong, and everyone who is long the stock is right, and the sentiment matches it. One thing that I really like about this chart is it had some sort of bearish negative gap, and then just completely shrugged off that gap, so it's hitting highs. These two topping tails right here and here just represent that when it got to this zone, which is 127 or so, twice, it got to that zone and then rejected from it, and then got to that zone and rejected from it. So there, at least at this time, was some entity, some power that be that was selling there. So as we get back to that zone, that's what I would watch for. So a close above kind of 126, 127 is interesting to me. Yeah, because there is something that happened here in which that they were pushing that name back down. But certainly a nice overall look. Right? This is, if you guys want to know what an uptrend looks like this. Now, a lot of people will look at this and say, okay, well, that's well overdone. I should short it. I don't really agree, just because of all the literature that I've read, that buying things that are going up, buying things in uptrends, generally speaking, dramatically outperforms trying to pick bottoms and do stuff like that. So that's probably the best looking one I've seen so far today. AMD, a lot of this is going to go with SMCI. Now, AMD, I don't have the fear, I would say, don't have the fear of the DOJ kicking down their door, but I don't know. Maybe they're they're not doing so well with their books either. But right, this is a larger, more established company. It's been around for a long time and all of that, but it's just dramatically underperforming Nvidia. So it's another one of those, why would I want to buy the thing that's doing the worst when I could buy one of the things that is doing the best? Sorry, I was drinking there. But you can see again, a lot of these I already have marked up, but this downtrend channel is really what I'm looking for in the stock. If this downtrend channel can resolve higher and we can break through, that's kind of 120-ish area, that's great. But below a declining 200-day moving average, and when you were below a declining 200-day moving average, I start to get a little bit worried, just because it means that essentially your average price for the last year, you're below that, right? And you can see that just by looking at the chart here too. It's obviously below its average price for the last year. So this one is one of those, again, that has been beaten down a lot. It's sitting at a very important level, this kind of 111, 112 area. If they can dig in here, that might be a good place to buy off some support. But again, I just look at it and I say, hey, this guy's been lagging the real leader out there, and the real leader out there has been Nvidia. So, do I want to buy them hoping that they do some sort of catch up, or would I rather just buy the one that everybody loves? So, for a trade, again, above this downtrend channel, I think is interesting. For a long-term hold, I would need to at least see it retake the 200-day moving average and show that it can at least beat the average price of itself over a little bit. VRT, Veritiv Holdings, pharmaceutical company. So, right, back to the 200-day moving average. Again, you can see it here kind of over and over again. Again, not holding to the tick. There's no magic in this, right? You're not going to, oh, I've learned about the 200-day moving average, now I'll be rich. But as a filtering mechanism, it's amazing. Just to say, I only want to own things that are above a rising 200-day moving average, or I only want to short things or bet against things that are below a declining 200-day moving average. You end up being on somewhat of the right side of the market, at least sticking out of prolonged downtrends. Anyone who is betting short against this thing as it just rallied its way up had a bad time, pulled back into the 200-day moving average, started to rally back up again. So what I will say is recently something bad occurred. There was some sort of negative news catalyst that happened here. I don't know kind of what that was, but when you see a really bearish down candle like this, that's a surprise event. And sometimes it can be a change in sentiment in the market as a whole, right? As someone who doesn't study fundamentals, it sometimes can be a fundamental shift. Whatever it was doing is it was grinding higher and everyone was loving it. That's great. You have this dramatic move down. This is something that can generally is caused by some really negative event. So what you want to see is like what we saw in, what was it, CLS, right? Where this also had some sort of negative type of event that occurred right here, and then it rallied up quickly to kind of say the bulls don't care. And when we're looking at VRT, we are not seeing that as strongly, but we want to. And so when you have a down move, and especially a harsh down move in the market, you're kind of at like a fork in the road. What's that meme? It's like, which way, Western man? And it's got the light and the dark path. And the idea is there's two kinds of psychological events that can occur when you have a big push down in the market. The first one is, okay, so we've had this negative event. I should sell my shares. And by I mean the masses, the institutions out there that really move prices. That event, got to get out of my position. The other one is you had a negative event and you had a downtick, and the masses go, oh, that's good. I was really wanting to buy this thing, and I'm glad that it got 20, 30% ticked off it, because now I'm buying it at a better price. And you can generally see that in what happens in the preceding couple days of price action. If you have a down event and then that just continues lower, it means that people were using that down event to run for the door. If you have a down event and then some sideways consolidation and then it starts to buy back up, that means that demand of whatever that negative event was being countered by the supply of people buying. So you need to see that. So long ramble short, the high of this candle becomes very interesting. If we can get above that high of that candle, just like we saw in that CLS, that would be kind of what I'd say, to reverse whatever happened here. I'd be worried that you have a sell off, a little bit of a bounce, and then if it starts to move and get under the low of that candle, then that's where people are saying, okay, well, they're trying to sell it off here. SGLY, never heard of this one. Yeesh. Yeah. Um, this just by looking at this company's likely going to be a zero at some point, unless they can really change something. The reason I say that, right, if we go to a monthly chart, if you ever looking at something, zoom out to a monthly chart and just go way back in time and look, right? This stock has never been a $742 stock. What happens is this company loses money, sells off, and then gets to a point where they have to do a reverse split to stay on the stock exchange. They do that over and over and over again throughout the entire life of the company. We're going back like 4 or 5 years here, and then here we are back at a buck. Since the company has never been able to come up with a way to save itself before from being delisted other than a reverse split, I would say the same thing is probably occurring again, unless there's some sort of a giant event that's coming up on this one. Technically, this is as broken as it gets, and just kind of says to stay away. So if you're trading something like this, it's purely because you believe that there's some event on the horizon that the market doesn't really care about or doesn't know about, and that will change the price. And again, the declining 200-day moving average, every time it hits that, it fails. Every time when you see something that every time it spikes, it sells off, that means, again, just the big rant that I gave about what happens when a stock sells. Is there people waiting in the wings to buy it back up, or do they just let it go? This is basically saying that every time it spikes, there's a whole bunch of people who are very excited to get out of this position for a decent price. Very speculative. Certainly be careful when it comes to something like this. Not something that I would touch with someone else's money. Soundhound, just another AI thing. And this is one of the little bit more of those speculative AI plays, but very typical, very, very typical triangle type pattern. Call it a bear flag or bull flag, call it a pennant. You can call it whatever you want, doesn't really matter. Just price has pushed higher, and now it's consolidating, congestion. And then as technicians, we have to bet that this congestion will resolve in the direction of the primary trend. So price can do price, generally speaking, trends, and volatility, generally speaking, mean reverts. Essentially just means that volatility, you go from periods of insane volatility to periods of very low volatility, and back and forth. So you had in this name, you had, right, a push up, and then you had a period of very tightening volatility where it's getting less and less and less. Then you had another push up. So could this occur again where you have multi months, maybe almost a year here of absolutely no action to move again? Yes, but these are one of those things where, for me personally, I kind of mark these lows and I say, if we're above these lows, I generally probably want to be bullish to be involved. If you're a momentum trader, you just wait for a break of this downtrend line around 16 bucks, and then you have a pretty good risk reward, right? If you're wrong right out of this price. If you're right, potentially things can go through here. And again, above a rising 200-day moving average makes your life just much, much, much easier. RKLB, the old Rocket Lab. Kind of the same look, right? You have to squint to see it, but kind of the same look there as Soundhound, where you had a big explosive move higher, and now you're having this sideways consolidation where the market essentially digests price and says, is this is right now at a fair price? It's not, or if it's not at a fair price, we'll sell it. If it is at a fair price, we'll just leave it here. So we're waiting for the next event to occur. So generally speaking, right, news events will follow the direction of the trend, which means, right, we have to bet in the direction of the trend as technicians. It's just what we study is that trends persist longer than they should for the market to be random. And if trends didn't persist longer than they should for the market to be random, then we don't have anything to do, right? There is no market to trade. That's basically what we're doing is we're looking for trends to extend themselves. So nice look, Obviously, anything that's gone from $3 to $30 and is holding that price is very interesting. So I would just mark your prior highs, mark your prior lows. If we break down under these lows in any significant manner, story's probably over. It's probably time to go. Think of the quantum computers in this kind of name. If we break the highs, $32 or so, continue higher, maybe it's kind of round two of this lag where we went from $9 to 30. I don't know if we would triple again. Generally speaking, each lag is a little bit shorter than the one before it. But again, looking very good, looking very strong right there. CrowdStrike. This has just been a great sector for a long time, and especially since this kind of sell-off lows. This was the CrowdStrike broke the world for a minute, right? They something updated wrong or something like that, and then planes got canceled, and the whole world kind of imploded. But since then, we're back to those highs. So this is another pretty obvious one. I love obvious charts, right? I find if you have to be too cutesy with your charts and draw too many fancy patterns and lines and stuff like that, you've kind of lost the plot. Right? My objective as a analyst and a technical analyst is just to find trends and ride them as long as the trends exist. And then when the music stops, you get out, you try to find your next trend. This one looks really good to me just because we have these highs around $400. We're consolidating up there very nicely. I think if we end up losing this 330-ish zone right here and the 200-day moving average, this might be over for at least a little bit like it was here. So hopefully not like this again. Hopefully they didn't break the world the way they did last time. But yeah, consolidating at highs. Are these all-time highs? Yeah, these are all-time highs. So, yeah, and again, the beauty of all-time highs is you know that every short that exists is losing money and is forced to cover at some point. You know every long that exists is making money and they're happy and they're not in any rush to go to the door like we saw with that uglier stock where every time it spiked there was a whole bunch of people looking to sell it down. So no bag holders and shorts are wrong. That's what we love about all-time highs. A nice looking trend. Again, a hot sector. Right? The more AI that exists out there, the more they're going to need to figure out a way to counter that AI with looking for some cybersecurity type thing. So I think cybersecurity, just from that kind of very overview thematic thinking, is very interesting. Hack ETF, I can bring this up as well. This is a good one to watch because where CrowdStrike got hammered a lot, the hack ETF, this is just a bunch of these cybersecurity plays together, didn't really as much as just showing that the cybersecurity sector is pretty strong. So this is one that I could definitely see looking into more as again you get this nice march up higher. I would watch this as long as this remains in an uptrend, then it's probably something that you can get involved in and stay involved in. It's also a good investment vehicle if you just want to make a bet broadly. If you're just saying, listen, I don't know which company is going to win. I just know that cybersecurity is going to be a thing moving forward. You can take a bet on this. Full disclosure, I always say this if I'm in something that I end up analyzing. I do own a pretty decent chunk of this hack ETF. I got in around here when it was at the 200-day moving average after that news event. My synopsis was just that, even though CrowdStrike got slapped around a bit, we still need cybersecurity, and in fact, we probably need cybersecurity more than we ever have. So let me get involved in this, and I just like some of these thematic ETFs as ways to take bets because I don't have to be smart enough to pick the individual name. I can just pick the theme. Like again, PSIL that doesn't care about any sanctions. Everyone wants to do mushrooms regardless of the sanctions, right? Or not sanctions, tariffs. LTM, Snow Lake Resources. So let's do our tests. Let's go to the monthly chart here. Has this ever been no, it hasn't been $1 million stock. So probably no reverse splits, but it's been on the way down. Anything sub $1, you got to start asking yourself the question of one of two things has to happen, right? So you can see it says right up here, NASDAQ, right? So this is listed on the NASDAQ. You cannot remain under $1 and continue to be listed on the NASDAQ. It's in the rules. So you do one of two things. You come up with some sort of news event or something that's going to excite investors in a way that it gets above a dollar and has to stay above a dollar for, someone can correct me if I'm wrong, a couple months. It's not just, you can't just pop your way up there, right? You have to hold yourself up there for a period of time. Or you have to do a reverse split. And reverse splits, generally speaking, there's been some stories of reverse splits rocketing stocks. Generally speaking, it is what we call the kiss of death around here, where it just shows that your company could not make a go of it. It could not stay listed on an exchange, let alone return shareholder value, without doing a reverse split, which is just, messing with the value of the shares. It's not really a vote of confidence. So just know that at some point that's happening, and when the news hits that they're doing a reverse split, then we need to keep in mind that that's, generally speaking, not good for overall stock prices. So that's out of the way, and just say, hey, that this is kind of a really, really speculative one that, unless they can reclaim that price really, really smooth or really, really soon, they have to, again, they've got to do that reverse split, which is not seen as a confident thing by the market. So now that we said that, we have some support right here. We have the 200-day moving average. We do have a lot of support above. It has made a pretty decent move recently from 16 cents all the way up to a couple bucks here. So maybe they're on to something, right? Maybe they can do something to turn it around. A high of a buck 80. This is a really speculative bet. Personally, if I were to trade something like this, it would be very, very small, right? I'd treat this almost like a call option, where if it gets cut in half or goes to zero, I'm okay, right? You put in whatever you are willing to lose 100% of when you trade something like this. Because if the news comes out that they do have to do this, then you're going to get a spike down into the, you get cut in half. Wouldn't be surprising to wake up one morning and see this thing cut in half, and also wouldn't be surprising to wake up and see something like this double. So just, again, you can trade anything, in my opinion, as long as there is liquidity for it, which means you can get in and out at whatever price you want, and you have a game plan to get out. Those are the two requirements for trading. But so in this case, you'd have to say, hey, I know I could get cut in half in this thing overnight, so I'm not going to, YOLO my life savings or anything into it. But again, you got some support down here around 60 cents. If we can hold that 60-cent area and start to push higher, then great. I would check on a couple things. One thing would be, what is their current status with NASDAQ compliance? Which essentially just means they issue a letter. The NASDAQ sends them a letter and says, you are non-compliant with our exchange. You have X period of time to rectify your stock price, or you have to reverse split, or we have to delist you down to the pink sheets, which you definitely don't want, because then you have absolutely no institutional involvement. Institutions cannot and will not play in that area. They will not play in the pink sheets. So you got to figure out what that. When is that? Do they have a year? Well, maybe they could figure something out. Do they have, just a month? Well, if they only have a month, then there's probably little to no chance that they actually get it done. So, right, understand what your time horizon is and go from there. Now, I do notice that since I've been looking at this thing, it hasn't moved a cent. So nobody really cares about this. So the other thing that I would look at, which is very important in stocks, is what event do they have to make people care? You can have a great company with a great story, and maybe they make a great product, but if they cannot get noticed by institutions, it doesn't matter. I can actually give you an example. So I own some of this outlet company. The reason I do, they make socks that is an FDA approved thing. I have two young children. You put the sock on the baby, and it's got an iPhone app, and it'll tell you the heart rate and the blood ox and all this kind of stuff. The thing got hammered, right, from $50 down to two or three. I own a little bit in this zone right here. They got their FDA approvals back. They're doing all the right things. But if you take a look at the same kind of chart, this is the 1 minute chart. Nobody cares, right? I don't have a lot of money tied up in this. I'm waiting for a breakout or some sort of move to get involved heavily. But you can see, even though the company, because I just follow it fundamentally, because I know that um, they they are doing everything right, but nobody cares. So that's not going to move. The company's not going to move because nobody cares. And then same thing with LITM. They could be doing everything right, but if you go into the 1 minute chart and it looks like this and nobody cares, then it doesn't matter if they're doing everything right. So you need to have some sort of catalyst that says, "Hey, people are going to start noticing this stock and they're going to start trading it aggressively." So make sure there's a catalyst and go research that how long they have before they get either delisted or they're forced to do a reverse split. Because if that's tomorrow or next week, that catalyst has to happen before the delisting, or yeah, things could get not ideal when it comes to this. We've got 15 minutes or so left, guys. So if you have any more questions or whatever, poke them in. Palantir, what's there to say technically about Palantir other than this thing's just been a beast ever since, and this is one of those perfect examples of waiting for it to break its 200-day moving average. I know a lot of people were buying Palantir on the way down here, and they really like the company, they really like the story, they really like the nebulous fact that this thing is, it's got a bunch of government data and CIA, black site, whatever that kind of stuff is. But it's been a long time under a declining 200-day moving average at a flat 200-day moving average. If you just started waiting for this thing to get above its 200-day moving average and that to start sloping up, that's sitting around $15 or so. You wouldn't be mad if you didn't get $7 on this, but you got 15. It's at 100. And then, yeah, just hitting new all-time highs. This market with the massive gap down we had today, the really strong gap down, and then the rocket that we've done since then, ever since they did the tariff thing, should really make you look at when we gap down today, what in your portfolio got hit the hardest? Those are the weakest names out there. What actually held on okay? Not necessarily on a percentage basis, but just go look at the charts, right? This gap down, if you look at the chart, doesn't look like very much. And just saying that Palantir held on very well. So while the people were worried about the world coming to an end with tariffs and they were starting to sell every stock that you could possibly imagine, they did not sell Palantir. So that to me is a sign of a really strong name. And again, the whole speech that I just talked about, all-time highs, every short is wrong, every bull is right, everybody's happy and going to taking off work early and having a good time. That's what you want to see. So a nice look. The level's pretty clear, pretty obvious. $85 a share. If you get above that, that's interesting. If you fail here, then you watch $65 below. Maybe you watch, yeah, $70 or so below. If we lose that zone, then maybe you back off for a little bit. But just a very, very strong name that everybody seems to be super interested about. So, definitely something that I am very interested in. I may actually get involved myself. We end up breaking that high. Kit, it's going to be another one of these, isn't it? Yeah. So this is a SPAC. Anytime you see like a sideways chop and then it sell off, you just know right away it's a SPAC. Now, SPACs are at $10. They're not at 370. So this is something that had to do that reverse split kiss of death over and over and over again in order to stay listed. It's been below a declining 200-day moving average ever since it was born. So this has never even gotten the spark of life once. And just continues to look like it is declining. So we hit that 200-day moving average on whatever this spike was that got people interested. Right? It had a nice little earnings shake up in December, or some news event, something occurred, and everyone got really, really excited. So that's great. So what I will say is you have a pretty clear line of resistance right here, is that if it can get above, just like I've been repeating myself probably ad nauseum at this point. If it can get above this 200-day moving average and hold for a period of time, then that's where I think you get involved, right? If you like this for whatever story, reason, whatever name it is that you have, I think you just wait to get above that 200-day moving average. If you can get above there and hold, you see how this stayed above for a day and just fell apart. If you can get above that and hold, then great. Then maybe the recovery process on this name starts. But just don't do the thing where you look at it and say, oh, it could get back to $300. I guarantee you at some point it's issued a bunch of shares, it's diluted its shareholders, right? You can look at Citigroup for this if you go on a monthly chart, right? People have been waiting for Citigroup to get back to all-time highs since 2007. So they're nearly waiting 20 years. Uh, and that's a massive name that's used all the time and makes a whole bunch of money. This kit, I don't think is that. So again, just, it's not going to get back to all-time highs. But hey, if it spikes from here and it gets to, I don't know, anywhere in this area where the last time the sellers came in, it's $12. That's great. Yeah, so just temper expectations on really beaten down names. Two things. So UUUU and OKLO are all energy plays. So I'm going to start. So that those are the last two that I see there is OKLO, which is one of those modular nuclear reactor guys hitting new all-time highs, which is great. NNE, I own some of. That one's holding well. SMR as well. These are all those they make little nukes to go right in your backyard, which doesn't sound terrifying at all. And then Quad U, we'll call it, which is a larger nuclear names. I like to analyze these by looking at NLR. So NLR is just an ETF. And just if you ever come across these ETFs, just know they have to, by law, report what their holdings are. So you can just go NLR holdings and you can just scroll down, right? They got to tell you, it's by law. These are the things that are in it. So both, yeah, there's Quad U and there's OKLO. So both these are part of this ETF. So they're going to be somewhat correlated to this ETF. And then the other ones, right? CEG and PEG, nuclear plays, CCJ. So again, this is all nuclear related style names. So again, if you want to make the bet that nuclear is going to do well, then yeah, this is a pretty good bet to do that with. Pretty good name anyway to do that with. So I'm going to analyze this one, and then that's what it's going to talk about, some relative strength and weakness when it comes to it. Sorry for taking a drink so much. I had a pretty wild week, so I'm just making sure my voice stands up. So first of all, you can see above a rising 200-day moving average. It's obviously a good thing. But longer term, we are stuck in this range. You can see it with URA as well, stuck inside a range, right? UUU. Also stuck inside a big range. So a lot of range bound action in the nuclear space. And I think we talked about the same thing with the range bound action in Nvidia and semiconductors. It just makes me think the whole world is kind of taking a little bit of a pause on AI, not obviously AI development or anything, but just taking a pause and saying, okay, let's see where some of this kind of capex spending happens here in the nuclear space. Let's just take a little chill and see if we can we can sort all that out. So while you're range bound like this, you either don't do anything, which is probably recommended, right? You just wait for the range to resolve itself one way or the other. Or you look for what in technical analysis we just call relative strength and relative weakness. There's a lot of papers and academic studies on this, which I talked about a little bit in the semi space. If you kind of basket all of the semiconductors and you just look at buying the strongest ones and selling the weakest ones, then you end up getting this overall picture of generally the strongest ones will continue to be the strongest ones and the weakest ones will continue to be the weakest ones. So if we look at NLR and we look at it right in the middle of its range, and then we look at Quad U, well, that's at the bottom of its range, and it's below a declining 200-day moving average. To me, that is okay. I'm less super hyped up about this particular name because it is relatively weak to its overall sector. We want things that are relatively strong to their sector. So why could this again? Lots of studies you can look up to prove that this is a phenomenon that does exist in markets, but it doesn't take it doesn't take a genius to kind of try to figure out why this would happen, right? markets go up because buyers are more aggressive than sellers, and they go down because sellers are more aggressive than buyers. So if you think about it that way, then it does end up making a lot of sense that you have this phenomenon in which the aggressive buying happens a lot in names that they think are going to outperform the market. So if the name is going to outperform the overall sector, if I'm a money manager and I'm saying, okay, AI is hot, I got to pick the biggest one, money will flow into that name that is, best of breed or a bellwether or whatever. And then they'll just leave the other guy behind. So for that to change, there needs to be some sort of fundamental shift that changes it well. The other thing is just beta. And beta is simply a metric of how much does the name move versus the underlying indices, right? If you're a high beta stock, it means if the market goes up, then your stock's going to go up more. It also means if the market goes down, your stock's going to go down more. So UUU, or I guess quad U is probably a better way to say it, is a lower beta name. So it means that you are exposed less from a risk side of things, but that also means you are exposed less from a reward side of things. Means if you are right, you will make less money. If you are wrong, you will lose less money. And that's just kind of the way she goes. Now, NNE is going to be the exact opposite here. Not NNE, it was OKLO. OKLO. So this is the exact opposite. So if we look at NLR, it's right in the middle of its range. Then we look at OKLO, it is on the high end of its range. That's relative strength. It means that when the market was selling, at least this morning and yesterday, they sold OKLO less. And when the buying came in, they bought OKLO more. Now, part of this is going to be that second thing that I talked about, which is beta. So it means it's a high beta style name in which it's going to move more than the market. In this case, the market would be that NLR ETF. So it means if you're right with OKLO and that NLR and that uranium nuclear as a whole is going to do very well, then this thing is going to make a bunch of money. If you're wrong, then this thing is going to get hit a lot worse. So right, right here, where it just was a little bit ago, is a 50% drawdown from here to here. So these things are just wild. So just keep that in mind. That yes, it looks much better than UUU, but if there is a turn in the nuclear space and the nuclear space starts to move lower, then this one is really going to get hammered. So it's important to make sure that you just understand that distinction. Yes, UUU is performing worse. If nuclear breaks out of this range, they'll all go. This will go higher. If it breaks down on the low end of the range, this one will get absolutely creamed and you will just lose a little bit. So it's what we come to when we were talking about that more penny-ish stock before. It's position sizing, right? It is dealing with that so that you understand that this name could double tomorrow, it could get cut in half tomorrow. That neither of those would surprise me too much. But it is understanding the other way around, right? That trip quad U will hold its value well, even if nuclear falls apart, but it also won't go up insanely. Same thing could be said with CEG, which is a big nuclear company, right? You can see this one's going to mirror that that a little bit more. So, last thing I just want to say quickly before we end it, and I appreciate all your guys' feedback and everything there, is a lot of people got really emotional about the market over the weekend and over Friday with the tariff thing. I just want to zoom out a little bit, have us all just take a collective breath and then just say, hey, we are just in the middle of this range, right? We're just range bound here. We were at this 580 area, which I think is, solid support. At least it has been recently. We were at that in January 13th, so 2 weeks ago. And then we were at all-time highs, like literally Friday, so yesterday in market terms. And we're just in the middle of those two ranges. So we're in like a 2 week we're stuck in the middle of a 2 week range. So before, if you're on social media, which we all are, and you're reading these things and someone's super bulled up and someone's super bared up, just know that the real price action, that just puts us somewhere in the middle. So again, I appreciate all you guys for coming by, and I'll talk to you next time I'm on.